Hey, it's William from Bags, and welcome to the CashPod, your go-to guide for building a bigger, better, cash-flowing business. Everything on this podcast is about mastering business finances, securing capital, and scaling without burning yourself out. In this episode of the CashPod, I'm going to dive into what you should know as a small business owner about policy changes and any other macro factors that might impact your business, including how to stay ahead of them, how to make sure you're protected from them, and how to react to change. All right, everybody, I'm happy to be here doing my first solo episode of the Cash Pod. I hope that my dear friends Daniel and Ignacio are enjoying some much needed podcasting break time. And today we're going to talk about something that is maybe a little scary, maybe a subject that has implications for the near term, but really we just want to take a macro perspective on how businesses can maintain a healthy perspective on policy changes at the government level, trend shifts in how business operations take place that may have implications for small businesses and their operations. I think a key example of this is some news that broke. There was an announcement regarding a change in SBA loans, and the change was specific to ownership requirements. Historically, there have been ownership requirements for SBA loans, and for anyone who's not super familiar with SBA loans, SBA, the Small Business Administration, participates in a program where they guarantee some percentage of a loan dispersed by often a third-party lender, and those loans often have to meet a higher threshold for approval because they're guaranteed by the government. Historically, those loans were specifically reserved for businesses that were at least 51% owned by a business owner who is a U.S. citizen or an LPR, a lawful permanent resident, like a green card holder. That threshold has changed under the new administration at the SBA, where businesses are now required to be 100% owned by a U.S. citizen or U.S. citizens or legal permanent residents. What this means is that a company that is even partially owned by a foreign national or someone who lives and is a citizen of another country are no longer eligible for SBA loans. It's a massive policy shift that even affects a number of existing Bags clients. And what's really important is that we are always prepared to take on these policy changes, roll with them, and that we're helping our clients build to be successful no matter what might change. We've also seen conversations about the CDFI fund, potentially facing defunding or other limitations in its ability to operate. The CDFI fund is responsible for a huge amount of the capital that community development financial institutions like these nonprofit banks that we love and love the loans that they offer businesses. The CDFI fund is responsible for keeping them operable. And if it were to go away, it would really limit the amount of local lenders focused on local business populations and offering incredibly affordable loans. Again, we are in an environment that is constantly in flux and changes can happen. So what are some of the biggest changes that small business owners should be prepared for? Well, as a business owner, you can't control everything. And one of the principles of life is that getting stressed out over things that are beyond our control is a fast way to just be burnt out. So the key recommendation that I would make for business owners in an unclear or fluctuating environment is to focus on the things that are within your control. Things like the quality of your products, the margins of your products. Obviously, some of these are influenced by macroeconomic factors, the profitability through which you operate, and also your ability to grow sustainably with revenue as the primary driver, as the primary funding source for what you're doing. Ways to prepare for changes are really to make sure that you are operating a business that doesn't require third-party intervention in order to ensure its success. And I'm saying that as a founder of a company that is backed by venture capital funds, that has the privilege of having operated unprofitably for years thanks to that venture capital funding. But when we were in that period, we knew that we were 100% operating at the whims of third-party investors, and that no matter how good our business idea was, if investors didn't want to back it, we wouldn't be able to continue operating it. Because of that, we've made a lot of shifts at Bags, including to operate our accounting business profitably, so that no matter what happens in the market, barring a massive exodus of our customer base, which we try to delight our customers and we're confident that that's not coming, we'll be able to stay in business offering our accounting solution and support to businesses seeking access to capital through our accounting solution. And that is the type of thing that we do to stay ahead of potential risks. We've built a business that really supports and partners closely with CDFIs. We would be devastated to see them go anywhere, but it's important that we operate in a way that's agnostic in terms of the channels that we have in order to make sure that we are sustainable, even if a huge portion of what we love about our industry is affected by policy. The key risks in an uncertain business environment are really that your business relies on something that is beyond your control in order for its sustainability and successful operations to continue. Those are things like operating unprofitably in an environment that's difficult for fundraising, relying on loans to keep your business alive rather than helping it grow. And the ways to mitigate them are the things that I'm talking about. And really, I think the key for staying in business in uncertain times is going to start and end in financial management. I meet a lot of businesses who just generally don't have a clear picture of their financial health. Sometimes it's because they have an accounting software that's designed for an accountant and it's really hard to read and it's hard to know what the unit economics are for a specific product or a specific project. And when that's happening, I've met business owners who are doing millions of dollars in revenue in a specific channel. And when we really get into the financial management, we realize, wait a second, this channel's not profitable. And when it's not profitable, it's not sustainable. Having a path to profitability if you're not profitable and having that path not rely overwhelmingly on third-party intervention is another mitigating practice that relies on financial management. Financial management is where we're going to have a sense for the runway of the business. How long can we continue operating in this model before we run out of cash? Cash to pay our people, cash to keep the lights on, really whatever it is. And businesses that don't understand exactly how profitable they are on a last month basis, last 3 month basis, last year basis are going to be limited in their ability to do an assessment and plan effectively for the future. The most important area, as you can probably tell from the way that I'm talking, is profitability. If a business is profitable and is operating strategically to have multiple revenue streams and a diverse flow of revenue to maintain that profitability, that business is far less subject to the whims of market factors, policy changes, or even consumer sentiment. Right now, we're seeing that at the public company level, snacking way down. No one's eating chips anymore, it seems. 7% reductions in quarter-on-quarter sales for some of the biggest snack companies in the world. And those trends are indicative of a shift in the broader population's approach to things. Sometimes it might be, hey, people are looking for healthy alternatives, so healthy snacks might not be feeling the same crunch. But generally speaking, when we see consumer trends affecting big public companies, we can expect those to tail down into small businesses as well. And so if your business is operating in the snack category, it might make sense to plan for a little bit of a either decrease in growth rate or even a decline in revenue performance in a period where consumers seem to be a little bit adjusted away from snacking. That same thing can be tracked with a little bit of, a weekly research, reading the Pro Rata newsletter by Dan Primack every day, just an effort to understand where trends are shifting. But a business that is in a category that's going to be subject to different shifts can diversify their revenue either by expanding into another product category or a different channel for sale. So if you're selling online, you might want to expand into retail to make sure that there's just a broader array of opportunity to generate sales and income to maintain profitability over time. I think the last thing that I would say is when the lending environment changes, businesses that are in an application process can get left in a lurch. In fact, I am, directly acquainted with a business that was in the process of applying for an SBA loan when the policy changed on Friday and is now ineligible for that loan as a result of the policy shift. So what does that business do? Well, the good news is that business isn't 100% reliant on the SBA loan in order to succeed. SBA is responsible for about estimates around 6 to 7% of all small business loans in a year. Now, a huge percent of that is going to be predatory lenders that I don't think should be allowed to exist, but unfortunately do. But at the same time, not everything relies on the SBA. So how do we go and look at local lenders, CDFIs, bank lenders that are willing to invest in small businesses and really make sure that we're diversifying so that a business has multiple options when it's pursuing access to capital? Because the policy change, while it does eliminate an option, shouldn't prevent the business from getting equivalent or similar results in another place. The other thing that I would say is getting through a lending process as quickly as possible is the best way to guarantee that you are going to get the loan before policy change. That doesn't mean going for loans that say they'll give you the money in 24 hours. If it's that fast, it's probably predatory. I've actually never seen a loan approved that fast that wasn't incredibly expensive or predatory for another reason. The way to get improvement in timeline is going to go back to financial management. So a business that has a really clean and detailed P&L, a really clean and detailed balance sheet, has effective document storage. So old tax returns, personal financials are all organized and easily uploadable, has what's called a complete loan package. For Bags customers, we present a full list of the items in a loan package. We allow our customers to match documents through upload to those items so that we can verify this loan package is complete before it goes to the lender. The reason it takes so long to get small business loans, affordable small business loans, is because incomplete loan packages lead to sometimes months of back and forth to try to make sure everything gets organized and put in the right place. And lenders, frankly, don't have time to assist in making that happen. Big part of what we do at Bags is make that really seamless for an entrepreneur. And we're invested in making sure that our customers have the ability to pull those loan packages together. And the results are pretty crazy. 5x faster time to lend for businesses that are submitting through the Bags connection versus just submitting on their own. And a big part of that is the implementation of a financial management system that's not just going to help you track your profitability, your sustainability, and how subject you are to whims of third-party independent institutions, ideologies, or anything else, but also is going to give you the ability to quickly pull together a loan application that's going to get approved faster and also allow you to diversify your options so that maybe you're running a competitive process to see who's going to give you the best loan so that even if something doesn't work out for one reason or another, you have a backup plan. Generally speaking, when you're talking about things like the SBA, we're talking about federal policy, but most states have their own credit initiatives or loan programs. I'll give a shout out to the state of Connecticut with the Connecticut Small Business Boost program. That program offers the best loans in the country. I haven't seen a better loan than a small business boost loan in Connecticut in years, and that is a state-backed program, so it's specifically going to support small businesses in the state. And policies like the SBA policy change won't affect that. Similarly, there are lenders that are operating. I'd give a shout out to Access to Capital for Entrepreneurs. aceloans.org is a CDFI operating in the state of Georgia for small businesses in the state of Georgia. And those are the types of programs that might be hard to find because search engine optimization is pay to play. But if you do your homework, if you talk to people like us, we'll help you find those right partners who can do something even when the federal environment changes. If the state policies are changing as well, sometimes going to the private markets for loans is going to be the best bet. But at the end of the day, what I'm suggesting and getting at is there are a lot of sources of capital out there. There are a lot of good sources of capital out there. There are tons of bad sources of capital out there. And so I encourage businesses to be patient, to be diligent, and to double down and focus on that financial management. Because at the end of the day, if you can run a sustainable, profitable business, there's nothing that can stand in your way of keeping the lights on, barring the types of unprecedented disasters that the SBA does tend to come through for, that communities do tend to come together around. And a good example of that, when we're talking about massive upheaval and changes, is the post fires in LA, where thousands of businesses, either burned down or were affected in their ability to operate. And in that event, multiple federal loan programs are activated. The SBA disaster loan becomes an opportunity. Communities come together. I did multiple talks with members of the Altadena community and the greater LA community to support them around that effort and give information. And when information is shared and businesses are focused on supporting the things that really matter, like good local jobs, stronger local economy, and a contribution to a community that we all want to be a part of, things tend to get better. We will never be able to control what's happening at the governmental level. I don't know if that's taxation without representation. It does kind of sound like it, but at the same time, I have to accept the things that I'm not going to be able to change and stay focused on the things that I can control, which is, I want to show up every day and provide an incredible experience to the people who are trusting me and paying me to provide that experience. And if I do enough of that for long enough, and I do it at a unit economic calculation that makes sense for my customers and for me, I trust it's going to work out no matter where my access to capital comes from, whether that be revenue, debt, equity, grants, all things are possible. And so to small business owners out there, I say stay strong, stay focused, and do the thing that's right in front of you every single day. Just tackle that next thing. Policies will continue to change. Under any administration, under any economic reality, things will change and stay in flux. There are very few things that are in our control, but those are often the most important things in determining our success. Thank you for tuning in to my solo episode. Please give me feedback. Maybe I'll do this again sometimes, or maybe I will never be allowed to again. I hope you enjoy, and I hope you have a great day.